Of course, it could blow through your limit and you wouldn't get it, but there you go. That's what your options are.
Yeah, one thing to kind of support what Gary's saying there is that at the market open, there are a lot of what is called market on open orders. And what those are, people who place orders call their broker maybe the night before, the morning of, before the market opens, and they just say, when the market opens, just buy whatever, 1,000 shares of this particular stock at market. Okay, make it a market order. And all they're saying is they just want to be in when the market opens into a particular stock at a certain size. So now, you have to understand, those kind of orders often are not based on anything that's going on in the market right at that moment. No technical analysis is being done on what's happening that first 5 minutes, 3 minutes, 5 minutes, 10 minutes, 15 minutes, 30 minutes of the market. It's usually someone who's doing a longer term play. They've just decided they like this stock and they want to be in. So for the first, 5 minutes or so, you have a flood of these orders like that just come in at market price that have nothing to do with the technical analysis of the moment. So that's part of what can make the open, and why a lot of people say don't trade the first 5 to 7 minutes or even first 10 minutes, because it can be rather chaotic and random price movement. So that's one, again, I like to talk about market logic, the reason why. That's the practical reason as to why opens are somewhat chaotic and random.
Here's a perfect example of it right here, Barry. This is closed at 1,500. This is open at 0900.
Mm-hmm.
So.
Yep. Okay. Oh, this is another one. Yeah, I remember this too. This person says, I recall a comment in the first video that the box colors may be off after hours. So maybe that's
the label color. Yeah, the label colors can be off.
The label colors, yeah.
The label colors is what can be off up on top here, and it's just because you're not getting a live signal to update it after hours, and it might be that maybe mom just flicked a little bit, and it got stuck. I'm gonna say mom dipped down just a minute, it got stuck, and then the market closed, and it just wait for the market to open. It'll come back alive again. And it actually can affect your signals on the screen too, but it would be the very, very last candle, a very, very last candle on the trade data that it would occur.
Right. Okay, good. So yeah, I see why they're asking about trading would the signal at the end of the day be valid. Yeah, that's a valid point they're making there. Okay, any other questions? I think we've answered them all. Oh, wait a minute. Oh, okay. So he's asking, so to clarify, does that mean the box colors may be wrong, but the arrows will still be right?
Well, the words will be right. Okay? Just look at the boxes and the words will be right. If mom is yellow here, whatever, I don't think mom can go yellow. I think it's either red or green. But stochastic, and it says wait, so that's right. But if stochastic says that it's sell, but it's green, then you know that the green color is wrong. It's sell. Just read the words, and they'll be right. They'll be correct. It's just the colors in these boxes that tend to get off sync.
Okay, that's a good distinction. In fact, I don't know if this will work or not, but on your 40-minute chart, scroll all the way over to the right, to the hard right edge of the screen. Yeah, so there's a good example. If you look at the trend, yeah, exactly. Yeah. Trend is up, but it's blue.
Right.
But you see the 50 MA there is totally green and angling up sharply. So there's an example for you. Yeah. So the words are right, but yeah, the color. Okay.
I don't even think we have a blue.
I was going to say blue. I don't remember blue.
I don't think we have a blue. But
green, yellow, and red. Where does blue come from?
Well, and to get these numbers, to get these colors, they're crunching a bunch of numbers. Okay.
Yeah.
And I can actually show you, I can actually set up colors by numbers if I want, or I can do by words or whatever. It's probably the numbers got crunched up kind of weird. But the words are the words. The words are what I tell it to say. So that's why it works that way.
Okay. Yeah, good. And then, next question somebody asked of me, is this a rubber band trade? No, that is not at all a rubber band trade. Not at all. No. For that to be a rubber band trade, the 50 MA would have to be angling down. You would have to still be below price, and it would have to be angling down on the short-term chart. You referring to the short-term chart? I'm assuming you're referring to the hard rate edge of the short-term chart. But if you're not, let me know. That's what we're looking at right now, so I assume, yeah, you were. Okay. Well, in that case, I'm glad you asked the question, because that is the exact opposite of a rubber band trade. And that is not even close to a rubber band trade. Rubber band trade would be, the 50 MA would have to be below price and angling down, not up.
Oh, for a short trade, yeah.
Yeah. Can you find an example of one there? Now, you can also do a rubber band trade where the 50 MA is flat, but only when price is extended a bit from the 50 MA, and they're not as high probability.
I don't see one.
Yeah, they're not, super frequent. Now, in day trading, I usually get one every day, but when you're using longer-term charts like this, no, they don't set up as often. Again, it's like when we talked about monthly charts. I actually pulled up a monthly chart, and I was running some quick averages here while you were talking. On a monthly chart, you'd get an average of 1 to 4, well, you get a range of 1 to 4 cycle highs or lows a year. A year. So that means some years you will only get one cycle high or low, not both, just one. Maybe a cycle low, that's it. For the whole year on the monthly chart. Yeah. And that makes sense, because the kind of the common accepted wisdom is half cycle lasts 9 bars. But that's if they're even, and a full cycle lasts 18 bars. Well, cycles expand and contract, so maybe on average. So if you figure that even if that's true, then a full cycle, which cycles are always measured from low to low, according to traditional cycle analysis, that means a cycle on a monthly chart would be 18 months. So that's a year and a half to get just one full cycle. So yeah, a lot of times the reason certain trades work is because there's something unusual happening. Again, we always talk about in trading you need an edge. Well, when everything's going along normal, that's not an edge. That's just stuff going along normal. So what we are often looking for is some sort of unusual activity or behavior, an aberration, so to say, where things get out of whack. And that's what the rubber band trade is. It's essentially, again, the market logic of a rubber band trade is where there's a short-term overly emotional response to something. Usually it's news or gossip or rumor that makes the market move faster than the moving average can keep up with it, and it flips on the opposite side of where it normally would be. And it's basically the principle of irrational exuberance that Alan Greenspan talks about. It's kind of a mini bubble, if you will. Not a major bubble that lasts for years, but a mini bubble that's just a knee-jerk reaction to some sort of gossip or news or whatever event it might be. And then the market reverts back to the mean once everybody kind of settles down. They're like, oh, well, that was just a bunch of crap anyway. So that's the market logic behind the rubber band trade. So it only occurs, during those times. Ronald asks, oh yeah, Ronald, I already sent that to you, my friend. The MACD and the stochastic that changes colors. I personally sent that to you, and I remember, dude. But I'll send it to you again if you want me to. No problem. That's easy. Yep. I'll do that. By the way, Ronald's one of them, too. There's a lot of people here, and Ronald's been in communication with me about this. So, yeah, Gary, if you could put that measuring of K back in so that people can
okay.
get that. He wanted to also get cycle highs, cycle lows entered during that time. Yeah, it's natural. It's part of the top dog trading, method, so people are used to that. And again, you'll have the option, everybody, of doing it, test it both ways, see what you're comfortable with. Just understand that if you do that, you're not going to get as many setups, and you will miss some otherwise good trades. The advantage is, obviously, when you do it, then, yeah, you are buying at a better price, certainly. And your risk also is smaller because your risk is only that, 1, 2, 3 bars of the cycle high or low. So there's always a trade-off, always a trade-off. I mean, I got friends who trade breakouts. They're breakout traders, and they do great. They do great. Now, I don't personally like breakout trading myself, but that doesn't mean it's not a valid method of trading because there's a lot of people who do make money with it. It's just you got to make sure that that energy is very, very dominant so that you don't get false breakouts, which, frankly, are pretty common these days. But I think what you're doing here, when we got the three energies all aligned so strong, that's the thing that encourages the market to continue to follow through, is that we are getting not only all 5 energies, we're getting like 15 energies aligned. All right, any other questions? I've gone through all the questions listed here, at least I believe I have, unless I missed any, but I don't think so. So if you need any more questions answered, please type it in now or forever hold your peace. Oh, by the way, I also typed in Gary's email to the chat box over there. So his email is over there in the chat box. It is topdogstudy@gmail.com. topdogstudy@gmail.com. And you are welcome to email him directly. In fact, if you have any questions about the Top Dog Study, we do ask that you do email him directly. He's the one who provides support for it. Okay, yes, I will, Ronald. I got your message there. I will do that as soon as I get off the webinar. I'll do that for you. No problem. Happy to do it. Okay. In fact, both of you, to make it easier for me, would you both just send me an email at barry@topdogtrading.com, and that way I don't have to look up your email addresses. I can just respond to it. Whoa, what is going on here?
I lost my audio for a while.
Oh, that was you. Okay. Yeah. You went away. I wondered what happened.
I was totally gone. I couldn't figure out what was going on, so I unplugged everything and plugged it back, and it came back online.
Okay. Yeah, things are acting up here a little bit. I'm not sure why. But yeah, my program's acting up a bit too on my end. Okay, well, I think we're pretty much, yeah, wow, what is going on here?
I think that's maybe a sign for us to shut it down.
Yeah, maybe. We are having some technical challenges all of a sudden. Mine keeps going on and off, on and off, on and off.
Well, I just went off, period. I can hear you fine, but
Really?
I don't know what's going on your end. You want me to give you the, you can maybe take the screen back, maybe that might help.
Okay. Okay. No, I think we can close it down. Nobody else is asking any more questions other than for me to send them those indicators. So, by the way, anybody who's on here who wants those custom indicators for Thinkorswim, which color code the stochastic and the MACD, really all it does is it changes the color red or green, whether it's moving up or down. That's all it does. But if you want that, happy to send it to you, absolutely free. And the email address, just send me your request at barry@topdogtrading.com. I just typed it into the chat box there too, and I'll get that out to you. And then if you need to have any questions for Gary, his email is in there as well, topdogstudy@gmail.com. I typed his email into the chat box, and he's the primary support person for this particular study. So if you have any questions that weren't answered or whatever, feel free to do that. Don't type your email in here, my friends. Nope, it's not going to work. You got to send it to my email, barry@topdogtrading.com, so I can just respond to it. Yeah, everybody's typing their emails into here now. It's like, no.
No shortcuts, guys. No shortcuts.
No. that doesn't help me. I want to be able to just click on it and respond to it, which I'll be very, very happy to do. Okay, well, no more questions are coming in, so I guess we're done for tonight. Thank you, everybody, for being here. I hope this was helpful. And Gary, thank you for taking an hour and a half out of your night to come here and provide the free webinar and supporting people. Any last words, my friend?
No, I'm just happy that we've got some delighted users out there. I've heard from them, and I hope everybody turns that way. It just makes me feel good. So, you know, all I'm doing though is I'm just taking what you gave me, Barry. You gave me the wisdom. I just figured out how to make it talk on a screen.
That's good. I like that. You figured out how to make it talk on a screen. That's good.
Right.
Okay. Well, thanks, everybody, and have a good night, and happy trades.
Back at you guys.